Hey, this is Bitcoin Asset Research with Allard. Today I'm going to talk about Strike, STRK. This is MicroStrategy's perpetual preferred stock offering, and this is definitely something that is very new. It was announced yesterday, January 27th, and if you go on this website, you can click over here to read a lengthy prospectus. You can click over here, the Net Roadshow gives you Michael Saylor 20-minute video with some slides as a pretty cohesive presentation about what this offering is about. And here are some quick highlights I had after going through this and doing the research. STRK is convertible into MSTR common stock. So throughout the course of this video, I'm going to denote carefully MSTR or MSTR common as the common stock, and I'm going to say MicroStrategy to mean the company itself, the actual business entity. Because of course we have STRK also, which is the preferred stock, and we need to delineate between preferred and common just for clarity of communication. So I just ask you to bear with me over there. $1,000 per MSTR common, that is the conversion price for STRK. And you could think about this as the option strike price for the option contract that is embedded within this preferred stock. Now this is an everlasting call option because the preferred stock is perpetual, so it does not expire and it can always be converted. So what you really have is a call option on MSTR common with infinite days till expiration. So this is an option with infinite time, and that is something very, very unique about this. It pays an 8% dividend based on the liquidation preference value. Just wanted to point out that this is definitely something very special because if you look on this chart, this definitely looks familiar if you've been following what MicroStrategy has been doing in the last few months. This is the chart from November, where it talks about how this company is uniquely structured as a capital refinery business, and it chops up the risk and return of Bitcoin into different tranches for different investors. And here we have MSTR dividend, and at the time it was not yet available. And I had also made a video where I had talked about how this is essentially an illusion to a future preferred stock offering, and it looks like now we have that preferred stock offering in the form of Strike, because you have this presentation and Strike is occupying exactly that position of the MSTR dividend, as you can see. So it's an 8% dividend based on the liquidation preference value. So what is that? Think of liquidation preference as the face value or the principal value if this were a bond instrument. So it's kind of the money that you put in upfront as the preferred stock investor. Another way to think about this is if the company were to go through liquidations, then the preferred stock investor would be entitled to whatever the liquidation preference value is before common stock investors got their payout. And within the capital structure, preferred stock ranks above common stock but below other forms of debt like convertible bonds. So that would be the ranking of seniority in terms of who gets the money in the event of a liquidation. Now STRK is offered at $100 per share, and this is effectively the liquidation preference value. Each share of STRK is convertible to 1/10 of a share of MSTR common. And this is where the $1,000 strike price concept comes from, because if one STRK share is convertible for 1/10, then that means you need $1,000 of liquidation preference value of STRK in order to get a single share of MSTR. So if you're buying one share of MSTR for $1,000, that is effectively a $1,000 strike price. So that's how that math works out over there. Now, while you haven't converted to MSTR common stock, so if you are a Strike shareholder, you may convert to MSTR common, but while you have not done so, you get a dividend, and this is 8% on the $100 liquidation preference value. So that comes out to $8 per year paid per Strike share that you own. Now this dividend yield is not going to be 8% perpetually, because yield as a financial concept, that is the dividend amount that you receive per year divided by the market price. And of course, the market is going to set the price for STRK. If STRK ever trades up to, let's say, $200 per share, then the yield is now that $8 per year divided by $200 market price. So that's a dividend yield of 4%. So when they say 8%, you have to remember this is only 8% on the liquidation preference value, really like the face value of this instrument. So yeah, definitely keep that in mind. It's not like 8% forever. You can't just buy it like 2 years from now and expect an 8% dividend yield. Now here are some other highlights. Now there's definitely a lot to cover. MicroStrategy, the company, can also force a redemption of STRK shares if less than 25% of the STRK shares issued this round is remaining outstanding. So why would less than 25% remain outstanding at any time? Well, let's say 75% of STRK holders have chosen to convert to MSTR common. And if they do that, then obviously 75% of STRK now disappeared, so only 25% would remain. If this ever happens, then the remaining 25% could then be forced to convert. And the way that would work is MicroStrategy would go to the STRK holders and they'll say, hey, these conditions have now been triggered. We would like to redeem these preferred shares at the liquidation preference value, and we're also going to pay you any outstanding dividends that you're supposed to receive. And at this point, if the STRK holders want to do that, then they just take the cash. But most of them at that point will most likely choose to just convert to MSTR common. So that's kind of how that conversation would work. Now, if you're finding this video helpful so far, before we get into more highlights, I just ask you to help me by showing a little bit of class. And by that, I just mean comment on the video, that it helps with the algorithm. Like this video, ask a question, share it with a friend, share it with somebody you think would find it interesting, and subscribe to the channel. This would definitely be very helpful. Now, MicroStrategy might want to force Strike shareholders to do this conversion into common stock if they no longer want to pay the dividend each year. But they could only do this if they are actually in that position. 75% have already converted. So that would be the only condition. Now in practice, we don't really know how this would pan out. It's very possible that Strike shareholders broadly would not want to convert, and if that's the case, then you could see a whole lot of Strike outstanding, and there would just never be a risk of MicroStrategy being able to force the preferred stockholders to convert. Now, the dividend on Strike shares is flexible. It's possible for the company to miss a dividend payment, but that also means that MSTR common stock shareholders cannot be paid a dividend until the preferred stock shareholders have their dividends paid first. And then the other thing is that if MicroStrategy desires to do regular MSTR common at the market offerings, then they must pay the Strike dividends. And this is actually laid out right here in this part of the presentation. You can see it right here. If the issuer sells any shares of Class A common stock, that's MSTR common, through the ATM during the 90 calendar days preceding a record date, then subject to certain conditions, the issuer may not defer an upcoming preferred dividend. So this is basically saying that if MicroStrategy desires to continue the ATMs as normal at the pace that they have, then they have to make good with the dividends. But really, the dividends would never be in serious jeopardy because it's not really the company's desire to skip these dividends, because that doesn't really help anybody. And they can always raise the cash by using the ATM too. And this is the other thing, like Strike dividends can be paid in MSTR common shares. That also can be seen right over here. The issuer has the option to pay the preferred dividend in Class A common stock. And if they do this, it would just be subject to a VWAP, which is a volume weighted average price of MSTR common, to compute how much common shares need to be issued to the Strike shareholders. So this is just another interesting thing, that if you hold Strike, you could passively receive some MicroStrategy shares. And of course, MicroStrategy shares accrue BTC yield. So there is this sense that in one manner of speaking, STRK basically gives you somewhat of a BTC yield as well. Now, you could also just take the cash dividends. If STRK only pays cash dividends and they never elect to pay dividends in MSTR common, then you can always take that cash and buy more MSTR common. At the end of the day, economically, it would be the same thing between whether you choose to take that cash and buy MSTR common, or if MicroStrategy decides to issue MSTR common as the dividend payment for Strike. Now, here are some of the last highlights. Definitely very long-winded here. Strike will be a separate ticker that is tradable on the Nasdaq exchange, and this is what's really, really cool about this. Because it's the separately traded ticker, it's going to be fungible, it's going to be extremely liquid, you're going to have a lot of volumes on it. We could likely see options markets develop for STRK, and this would be really cool because you'd have calls and puts on a product that is itself a call option, right? Because you have an everlasting call embedded within STRK. And if you have call options on top of that, like now you have this very interesting structure where you could potentially have options on STRK that allow you to do other cool things with them. So STRK will also have its own at the market offerings. So MSTR Common has the ATM, STRK will also have the ATM. Now it's important to note that right now for this first offering, we're only talking about 2.5 million STRK shares outstanding. So at 2.5 million and $100 per share, that's going to be a total raised of $250 million. Through the at the market program, MicroStrategy can continue to sell more STRK into the market and get money to use to buy Bitcoin. Now, because of this opens a lot of fascinating possibilities. MicroStrategy can sell STRK the same way it currently sells MSTR Common in ATMs to increase BTC per common stock share. Okay, so it's always going to be to increase BTC per share, but the share here that we're talking about is MSTR Common. Each time MicroStrategy taps the Strike ATM, it's going to generate a BTC yield for MSTR Common. And just as a reminder, what is BTC yield? It's right here. It's just MicroStrategy's key performance indicator, and it represents the period-to-period percent change of Bitcoin holdings divided by assumed diluted shares outstanding. And assumed diluted shares outstanding is basically the most conservative estimate of how much shares there are, how much common stock shares there are. And it just assumes that all of the convertible securities all convert, and it gives you a denominator that is the highest possible based on all of the company's outstanding securities. So the assumed diluted shares contribution for Strike at the market offerings, that's always going to be 1/10 of a share of MSTR per share of STRK. Okay, because remember, 1 share of STRK is convertible to 1/10 of a share of MSTR. So every new STRK is issued out over there, that's going to add 1/10 of an MSTR common share to the assumed diluted shares number. This is going to be a number that people are going to be watching for, because if we're looking for BTC yield, then obviously assumed diluted shares is important. So we now have to consider what is the assumed diluted shares contribution for these Strike shares. Now, convertible bonds, they contribute to assumed diluted shares at a premium to the market price. And this is just the conversion premium. If we go back to the 8K over here, you can scroll down and see that these are all convertible at these strike prices. With Strike, the conversion premium is gigantic because Strike's conversion price, its effective strike price, is $1,000 per MSTR share. And these are like 140, these are 180. The highest really is $672 per MSTR share. So you're looking at something that has a much higher conversion premium than any of the securities that's ever been issued by MicroStrategy. Now, this is particularly great because Strike will have a liquid market. If Strike gaps up, then MicroStrategy can tap the ATM for Strike, and it can tap it to generate more BTC yield for MSTR Common. Now, why would Strike gap up, right? Well, it could gap up just by volatility. If the out-the-money call implied volatility for MicroStrategy common shares increase, that alone could push STRK much higher. Because STRK is itself a very long-dated out-the-money call option on MSTR Common, if we have MSTR Common's call implied volatility, if we have that go up, then STRK is going to go up as a function of it being a call option, right? So now we have this very interesting situation where if implied volatility goes up, we could have this ATM that is available for tapping, even if the common stock is going down. Okay, so I'm gonna say that again, right? If the common stock goes down, if MSTR goes down, normally if you sell more MSTR, you're kind of getting less bang for your buck. But we can have a scenario now where the common stock can go down, but if implied volatility is going up, then that means STRK could also be going up. And that is another avenue for at the market offerings that can be tapped to generate more BTC yield. And this is a very interesting dynamic that I think more people will start to track much more closely. So what's going on here? Like Strike at the markets is effectively a way to instantly sell everlasting options into a liquid marketplace for everlasting options. And why is everlasting important? Well, it's the highest money you can possibly fetch for an option. These options get their value really from two different places that are variable. One is the implied volatility, and this is going to move with the market. It's going to change second to second. And then the other is time value. So if the option has a lengthy time value, then it's going to be worth more than an option that expires like tomorrow. So with these options, we're talking about everlasting options. So you basically get the highest amount of money you can possibly get for that option series because you're selling an option with infinite time. So that's something that's very important because you now would have this liquid marketplace for these everlasting options, and you could just sell into that. So it's like a very refined version of tapping into the volatility business. Now, what's the trade-off for this? Well, it's a higher dividend. The convertible bonds, they are going for 0 coupons, right? Like extremely low coupons. And Strike will have a much higher effective coupon rate. So for instance, let's say because STRK goes up to $400 per share, that $8 per share dividend is going to come out to a 2% dividend yield. If MicroStrategy then taps the ATM to sell Strike at $400 per share, what's going to happen is they're now effectively locking in this 2% dividend yield that they're now on the hook for, and it could potentially be forever. So that's something that is this trade-off. Like you are selling this option contract with infinite time, but as a result of it, you now have to pay this dividend that's this negative carry on your balance sheet every single year. So that would be the trade-off here, and the company now has to evaluate what other options does it have, what other things that it can do in order to make this work, or if it doesn't work, to ignore it for the time being. Now that's a quick overview of Strike. There are very interesting things which can branch off of this. Like I think there's several extremely interesting things to look into, and I hope to cover these in future videos because this one's really long, so just definitely stay tuned for that. And just to give you a quick overview of what I'm thinking, here are some of the topics. Right, so the first one is MicroStrategy now has this very special optionality because of the Strike ATMs, and I've kind of touched on that in this video, but this can be a very deep rabbit hole in and of itself. The second thing is that Strike has a unique volatility arbitrage play. Because of the embedded call option, and because this embedded call option has infinite time, someone could theoretically buy Strike at a price that they assess the call option to be undervalued at from a volatility perspective, and then they could use dynamic delta hedging against that position in order to arbitrage the volatility. This is of course going to contribute to more activity within the MSTR common spot market. It's also going to potentially contribute to more volumes in the MSTR options market because you could also use options to assist with this volatility arbitrage. And this would be something very interesting that we could also cover. And potentially, it wouldn't be impossible to pull this off as a retail investor. Now, the third thing is how to value STRK as a security. And this would just be standard security valuation procedures, right? So you obviously have that 8% coupon from the dividend, and you also have the option value of that everlasting call option. So really, STRK would just be the combination from that. And we can see that inside these slides too. So here I've pulled up that slide. It says valuation framework. Strike would just be your 8% dividend plus your perpetual call option. So how would you value something like this? That's also something that we could always talk about. And STRK, because it will be liquid and there's a tradable market for them, there's definitely going to be opportunities where STRK is trading for cheap, and it makes sense to pick up some of it. And then the fourth thing, last thing that I have right now, is the possible impacts of options on Strike and the securities which could convert to Strike. So if Strike is publicly traded on the Nasdaq, we could eventually have calls and puts develop around that. And then potentially securities which are then convertible to Strike, which now would be an option on MSTR, right? So this could be another way where MicroStrategy can sell another stream of volatility. So now they're not just selling the volatility of MSTR common, but they're also selling the volatility of MSTR common by selling the volatility of Strike. So this can get very convoluted and very interesting. I personally think this is the least relevant for the right now, but it would be a very interesting thought experiment. So what's the big picture view for all of this? I've been saying that MicroStrategy is Bitcoin's only investment bank. And I think this offering is just making it much more obvious. I think Strike is really nailing home this point. And if we just take a look at this picture, I've shown this in the past in previous videos. This is what MicroStrategy is doing. It's sitting in the middle of the capital markets between Bitcoin and all of these different investors. The investors give MicroStrategy capital, which is funneled into Bitcoin, and then what comes back to the investors are MicroStrategy securities. So these are bonds and shares, and now we can add preferred stock as well. And if you look at what an investment bank does, that is exactly what an investment bank does. This is an investment bank sitting in the middle of the capital markets, and it connects institutions to corporates, to corporations. So in this case, MicroStrategy is just Bitcoin's investment bank, and that Bitcoin is MicroStrategy's only investment banking client. And with normal investment banks, you have a multitude of different corporations. So really the business model is now starting to take shape where MicroStrategy chops up risk and return profile of Bitcoin and makes it palatable for all of these different investors in the capital markets. Long term, I see BTC Yield going much, much higher from here, and MicroStrategy is well on way to becoming the largest company in the world. This is very, very bullish, and I'm very, very pleased with these recent developments. If you enjoyed this video, be sure to hit the like and subscribe button. Leave a question or a comment in the comment section below. Definitely stay tuned for the update series on Strike and for MicroStrategy. Thank you so much for watching this video, and I'll see you next time. Bye.